thanks for being here. Much appreciated. Yeah, prior preparation prevents piss poor planning. I've done that. I have been ready, but internet, hey. So today we're going to talk about good and bad money habits and decision making, because I see a lot of people in the past I've seen lots of people whinging about their personal, financial situation, etc. And everything is incongruent with, what they say and what they do. They're like, oh, I want to be richer, I want to have more money, blah, blah, blah. But yeah, their habits, their money habits and the things that the decision making is completely incongruent with what they say they want. And at the end of the day, I think it's a prioritization thing. So a lot of people say stuff, but do they really want to? I think it's a bit like me in health. I'm fully aware that, your health is the most important thing, and you and your family's health is the most important thing. But do I do much about my health? Nah, I do nothing. I sit on my fat ass every day at this desk all day, and I do nothing. So, and it's the same with money. People just I don't think they prioritize it enough, and so they don't do the things that need to be done. And I'm a gamer, and I think having a gamer mentality actually helps. Even if you're not a gamer, you should try and look into gaming attitudes or gaming mentalities, because it helps you hack things, and it helps you get rid of the fear of stuff. Like in a computer game, you never go and cry in the corner because you just failed at a level. What you do is you hit reset and do the level again, but just don't do the errors that you made. And you should treat that with wealth generation. So, for example, I've written a few here. I was hoping that we'd have an actual conversation going on Clubhouse. Evidently, we can't do that today because one last try. Stupid iPhone. Because if this doesn't work, then let's just turn it off. Sorry. Yeah, so I'm going to have a list. Please pop down in the comments if you can come up with any bad things. I have had a haircut, Tom. So yeah, but you don't know who did my haircut. So anyway, the first one is don't kill the magic goose. Okay, so this is probably the biggest thing which I obsess about. So for example, if you have a whole pot of capital, you should not touch that capital with a barge pole in terms of spending. You should not spend that capital. What you need to become obsessed with is turning that capital into cash flow. That is it. All I think wealth generation is capital arbitrage. Can you convert capital into cash flow? That is the most important thing. Again, that's why lots of lottery winners and celebrities become broke, because they don't understand this magic rule, which is don't eat the magic goose. You need to eat the eggs that the golden eggs that it pops out every day. So just convert your capital into cash flow. So I think we spoke a little bit about this on one of the previous ones, which I think was what do you do with £1 million? And lots of you had really good answers. So I think that's the first one. I think those that tune in here every day are slowly getting that you just must not touch the magic goose. I remember in fact, every car that I've ever bought, I've always been tempted to, just splurge on the capital. But I think, in fact, recently, the most recent one, I say recent, it was about 5 years ago, I wanted the new Tesla Model S. So I think this was like 2015. I was like, oh, I really want it. And back then it was like the P90D came out, the DL with ludicrous mode. It did 0 to 60 in 2.8 seconds. I was like, I need it. I really want it. And I was about to go and splash 125 grand on this car. And then I was just saying to Ellie, I think I may go and get that Model S. It's gorgeous. Because we had a test drive already. And she was like, Siam, you know your rules. I was like, shit. Yes, you're right, honey. And the rule that she was implying was don't go and blow the capital. And our little rule is that if we ever want a nice thing or a toy, we have to go out and create the cash flow to create it. So I said, okay, what I'll do is I'll take 20 odd grand out of the business or something like that. And then I created this new product, this new marketing thingy. And from that 20 grand, lump of capital. I think I created something like £5,000 per month cash flow. It was just a little sort of experiment because I worked out on PCP that car. It was only £1,200, so £1,250 a month, so £1,250 a month. So my goal was to create a little bit more than double that, so there was a bit of buffer. So I think I was trying to create like £3,000 a month. Anyway, I took this 20 grand out of the business to create this new thing. That chucked out sort of, I think it was about £5,000 a month in cash flow, but what is minus the VAT? I think that's the thing I was aiming at. Divide that with VAT. Yeah, so it was creating just over £4,000 a month of gross revenue per month. And then once I did that, I then went out and got my car. So effectively, it was a free car, or yeah, that's the way I look at things. So not only did that 125 grand car help reduce my corporation tax by 25 grand, because I could write off that whole 125k off the P&L for that year, so it saved me massive CT or corporation tax bill. But it was a free car because that, I didn't touch the capital. They still had the capital, and I was getting £5,000 a month revenue in, which paid for the car. So that's what I mean by don't kill the magic goose, eat the eggs. So that's that. The ongoing thing is that Ellie wants a house, and I don't want a house. As in, I don't want to buy a house, but she wants to plonk, big chunks of money into a house, which is just the worst possible thing you could do for your capital. Literally, like if you have personal capital, buying a house is the worst thing you can do from a wealth generation point of view, because you're blowing so much. You're just parking capital and you're not turning it into cash flow. It is just ridiculous. Literally every time I see someone on Facebook like having a picture of the, dangling their keys going, hey, new house, and it's their home, it's not like an investment property, and it's like their home, I'm like, especially when I see people trying to get rich and trying to hustle and grind or whatever, and they're buying a house is the worst thing you can do. I mean, put it this way, like this house I'm in right now is like a £2.5 million house. We've got a 25-acre garden. I mean, lockdown's been fine for us because we've got like endless amounts of walks outside. But it's £3,000 a month. That is the rent that I'm paying. It's ridiculously cheap. And and what is the yield? I mean, let's look at the yield. So £3,000 a month times 12, that's 36 grand a year. Divide, let's say at best, the lowest valuation is 2 million. So divide that by 2, 1, 2, 3, 1, 2, 3 times 100. There we go. You probably can't see that. 1.8%. Their gross yield for this house is 1.8%. It's ridiculous. And then after clause 24, where they can't offset, tax, basically they're taxed on the full rent, not the profit, then, I mean, this is probably a negative yield. And no doubt, they're probably going to raise the rent, which wouldn't surprise me. If they did raise the rent, I'd pay it because it's still really cheap. So I'm living in a £2 million house, at least £2 million house for £3,000 a month. And what do? I've basically taken some capital out, like I do with anything, created a new cash flow, or for this one, I think I just put more into my Facebook ads, and it's created more than £3,000 a month. So this is like, again, I feel like I'm living in here for free because all I'm doing is converting capital into cash flow. So that's that. And so this is the thing. Let's talk about houses. Ellie wants a house. And I'm going, right, honey, let's say we want to buy a £2 million house. You're not going to really get a 10% deposit. So really, it's a 40% deposit. To get a house like this, it's hard. Like when you look at your income and stuff like that, you won't get a 10% deposit, stuff like that. So 1, 2, 3, 1, 2, 3. So let's say 40% deposit is probably best for something like this, times 0.4. So we need an 800 grand deposit, and then the fees are going to be ridiculous. So there's all sorts of stamp duty, the legal fees, etc. So it's best part of £1 million. Call it 900 grand. So, and basically I'm saying, honey, like if you wanted a house like this, to buy, we're going to be spunking 900 grand, call it, as in parking 900 grand, which, and then obviously we've got the mortgage to pay, obviously. But what is the opportunity cost? So this is the thing that really grates me every day. Opportunity cost. I've lost sleep over opportunity cost and working it out and stuff like that. Not about this particular thing, but other deals and stuff. But what is the opportunity cost of parking 900 grand? So a rough rule of thumb, what I personally do, everyone is different. Everyone is different, but I divide it by 10. So whatever capital I have, I can at least get a tenth of that capital as a cash flow. So what this means is if I have 100 grand of capital, I can easily turn that into 10 grand a month of cash flow, if that makes sense. Recurring revenue. And that's exactly how I grow the businesses. I just keep on plowing the capital back into marketing and stuff like that. So if I take 900 grand and divide that by 10, that's 90 grand. So parking 900 grand for me is going to cost us 90 grand a month in cash flow. That is why I don't buy houses to live in. If you're talking about investment properties and stuff, yeah, it's something else. That's a completely different topic. But for me, yeah, this is where a lot of people think, Siam, you're an idiot. But everyone is different. There's no correct answer for everyone. So all these things I'm going through right now are, I guess, things to be aware of, but it may not apply to you. So I just seen here that Janie said that you've just bought. That's great for you. Bear in mind, like, obviously people are different. So if you're someone who has, I guess if you're a business owner and someone with a job, it's completely different. Like, let's say you have no dreams to, get more money, and that's a lot of people. Most people are happy to earn less than, say, 3 grand a month for the rest of their life, and that's fine. And if you're in that camp and you want, say, you're happy, with under 3 grand a month forever, then yeah, probably one of the things that you should do is park your money in a house, because I guess people in that category don't know how to convert capital into cash flow. So if you don't have that skill of capital arbitrage, then yeah, buy a house, do whatever. But everyone is different. For me personally, I'm not in that camp. My personal goal is to hit 12 mil liquid net worth, and then I can start really throwing cash around to get my passion projects up and running. But the thing is, because I have all these passion projects I want to get going, nanotech, 3D printing, vertical farming, and my school, more importantly, like, all of this needs money. Like, my school that I'm trying to set up, just to get a bare basic nursery set up, has an OPEX of 25 grand a month. 25 grand a month. So I will need to fund 25 grand a month just to get this up and going. So I need capital. That's why I'm in a different camp, if that makes sense. So so Janie said, just had to put £90,000 of income on deposit. It's insane. Yeah. So for example, for me, like, that 90 grand in capital, I could turn into 9 grand a month of cash flow. Or hell, even if you could, these days you can easily find something that makes 10% yield. So your 90 grand, you're now losing out on 9 grand a year of yield. But hey, as I said, there's different things. So Tom Guntrip has said, I think a £3 million house is very different to, say, a 300 grand house. Yield is way higher with a lower value property. 5% deposits coming in the budget this week. Yeah, I know. But the thing is, a mortgage is probably one of the worst financial products any normal person could ever use. Because when you look at the depreciation chart, so what happens is, see, banks are very clever. Okay, so one thing, if you have a 200 grand house, if you get, let's say I'm a bank, okay, and I'm giving out all these mortgages to people, etc., and I don't know, someone wants to buy a 200 grand house, or let's say it gets a 200 grand mortgage. Me, the bank, will make, rough rule of thumb, 200 grand over 30 years. So basically, whatever the value of the house is, the bank is going to make that in interest over a 30-year period, plus or minus, some sort of margin. So, of course, if I'm a bank, I will want to give out as many freaking loans as possible, as in mortgages as possible, because you have all these people buying, 1, 2, 3, 400 grand houses, and me, the bank, is going to make that over 25, 30 years. But here's the thing, they have huge amounts of statisticians and actuaries and stuff, and they know that the average person doesn't stay in a house forever. They move roughly, I think it's every 7 years. And so when you look at the chart, as in your mortgage repay off chart, you don't really start paying off most of that capital after about 8-9 years, because they know that they got you, and the second you've remortgaged, they've got you again, and they got you for life, basically. That's why everyone, it's one of the biggest scams that the banking industry has pulled over the public, and the public have no idea. They think rent money is wasted money, but it really isn't. It's your, interest fees go to the bank is, basically the same value as your house. That is wasted money. So, yeah, and of course they're dropping the deposit requirements 5%, then it'll be 0%, because they want to keep that scam going. Yeah. So, but yeah, yields higher with the lower end. I completely agree, Tom. What else is there? Ed, hey Ed, long time no see. He said, made it to a session, glad I'm here. Hope you're flying along as per usual. Yep, just plodding along. Okay, so that's yeah. Right, that's the magic goose. Let's move on. It's 20. I spent bloody hell 20 odd minutes talking about that. The next little point, it's not. Yeah, it's nothing massive, but you need to bulk buy. Literally, any household product that you can bulk buy, do it. So for example, so here's a funny story. We have always bulked buy stuff simply because if you bulk buy at, say, a cash and carry, you can get like Booker's, cash and carry, all those sorts of things. You'll get really good discounts compared to Tesco or Sainsbury's or whatever, and especially if you can buy certain stuff through the business, even better. But let's ignore the business type stuff. If you bulk buy stuff, it's fair to say you could easily get a 20% discount compared to shopping at Tesco, Sainsbury, etc. So what that means is all the money that you're putting into bulk buying, you've effectively made 20% ROI. Because you've made that 20% saving, it means you've effectively made a 20% ROI. So it's one of the best things you can do, bulk buy. And so here's a funny story. We've always bought toilet paper, literally. I think every 3 months we get this massive delivery of toilet paper in, and it was at our other house, and this was during the whole, everyone was like panic buying bog roll and stuff like that because of the corona bollocks, and so my cleaner opened the door, and I heard I saw a big van pull up, so I was just wandering down the stairs to see what it was, and there's this massive like 3 month. Oh, in fact, it wasn't that much. It was because it's quite volumetric, if that makes sense. Yeah, it was just loads of loo roll, and she looked at me, and I was like, "This is not what it looks like. Seriously, I'm not panic buying loo roll. Honestly, this is just a normal like bulk buy delivery thing by Amazon." So yeah, so do Amazon subscribe and save. I mean, I think on most things they give you like 10% discount straight away. So yeah, anything that's non-perishable, just bulk buy. It's like the easiest savings ever. So I mean, just put it this way. Let's say you're spending, I don't know, 12. I'm just making this up. 12 grand a year on stuff. So call it £1,000 a month on stuff. With a 20% discount, that's £2,400 a month that you're saving, which is divided by 12, 200 quid a month you're saving. So that's like putting in a little investment and making 200 quid a month. So definitely bulk buy. What else is there? Automate savings and investing. So yeah, I mean, it's a no-brainer. If you automate your savings, so you set up a standing order into a savings account or an investment account or whatever, that will, so straight away that needs to come out, and it needs to be a minimum of 10% of your income. So it's just a good habit. So, however, it's all very well automating your savings pot and automatically putting a whole bunch of money into your investment pot, and then and then if you're silly with your investment pot, then you then have a cascading effect of idiotness. Like, yes, you do everything well, so so you could look at all of this and go, right, I'm not going to eat the magic goose, I'm going to eat the eggs. Cool, I'm going to do that. I'm going to bulk buy stuff so I can save 10-20%. Cool, I'm going to automate my savings and investings. Cool, yeah, I'll do that. Sweet, I've got this flow of money coming into my investment pot. Let's just put it all on some shitcoin, some crypto shitcoin, and all of a sudden you do like months of great habit building and stuff, and then you just go and blow it with one other bad habit. So one bad money habit, a decision-making process, will completely ruin months and months of good work. So, and this is something which I struggled with a lot, because I have a gambling streak in my head, which is ironic because I'm a trader, and being a gambler and a trader is not a good mix. So this, I think, leads me to different pots. So with my trading, I've had to create gambling coping mechanisms. So I basically have one pot over here, which is like my proper DIY pension account where no silliness happens whatsoever, and it's really boring. But then over here, I have my gambling account, or my crash account, or my aggressive account, whatever name you want to give it. And I'll have typically 10% of my whatever trading funds, I'll have 10% in my gambling pot. And that is where I'll go, hey, lovely shitcoin, all in. And I'll just take some big bets. So if you look at my Instagram, you can't see my screen, but have a look at my Instagram, and I post all of my notable losing trades. Not my run-of-the-mill trades where I've lost like 60 quid on a trade or 200 quid on a trade. I put my notable losing trades on Insta. And like, I think the other day I lost 24 grand on an oil trade. And people think, oh my God, I'm such a shit trader. No, that's part of my gambling account. I encourage myself to scratch that itch, because if I don't scratch my itch over here on my tiny account, I'm going to start scratching my itch on the big account, and that's where bad things happen. So have gambling coping mechanisms. But also different pots. So you can't see this. I wonder if I can share my screen without deleting the whole bloody caboodle. Streaming. Can I share my screen? No. I really want to start doing this on Zoom. No, I think once I've started it, I can't change it. Can I? No. Okay, I'm not going to risk it. I'll just have to... I've got a picture here. But basically, this is what everyone can do. But you should have 4 different pots. So I have what's called an operating account. So this is you personally, not a business. So an operating account. And so this is where all of the money goes into, basically. So if you have an income stream, pretty much everything goes into this. And all bills and living expenses and all outgoings are paid from your operating account. But at the same time, on the 1st of every month, you should have a standing order into 3 different accounts. So 5% of your income going into these different accounts. So 5% going into your PDA account, your personal public display of affection account. No, personal development account. So this is and this account you spend on courses, seminars, books, workshops, Audible subscription, anything that grows you, basically. So 5% a month. Another standing order of another 5% of your income goes into your wealth account. So your wealth account is basically your investable pot. But again, there's a little subsection. In that little wealth bucket, there's 2 sub-compartments, and where 90% of that goes into cash flowing assets and 10% goes into capital appreciating assets, shitcoins, stuff like that. So that's your wealth account. So remember, in your investable pot, your wealth account, nearly all of it needs to go into cash flowing assets. And then the last pot, which gets 5%, is your reward account. Now, your reward account is basically you have to spend it and you have to blow it every month. So as I've put in this infographic, whatever the hell you want, but you must deplete this account every month. That's crucial. So what happens here, so if you do this thing, you'll automatically be saving 15% of your income per month. So, I don't know, let's just say 1,500 quid lands in your personal account. What is 5% of that? So there we go. So £75 goes into your PDA account, £75 goes into your wealth account, and £75 goes into your reward account. And then, yeah, go out and blow 75 quid a month on your whatever, toys, gadgets, whatever. Because we're human at the end of the day. Now, obviously, you don't need to do these percentages. You could be putting, 2% or whatever, preferably more. Try and do as much as you can. So a good thing to do is reduce your outgoings as much as you can without, killing your lifestyle, because it's, and then try and max out your other buckets. So this is where I think I go against the grain with some people, where they're like, cut everything, get vouchers in the newspapers, cut this, and before you know it, you're leading the most miserable life possible. Like, I've done it. Like, when I was broke, I've done that. I because I'm a gamer, I even gamed how cheap I can get meals. I lived on Marmite pasta and cheese pasta for like ages. It was a 6-month period where Ellie and I were just stone broke, and I managed to get each meal at 6p. I was shopping around, getting vouchers, all sorts of stuff, and if you melt butter and Marmite and then over pasta, really cheap meal. But it's miserable cutting and cutting. What I prefer to do is put a temporary ceiling on your current standard of living. So right now you're living, let's say you're comfy, you're happy, whatever. Put a cap on that, okay? So don't be any more ostentatious or more flamboyant than that. And go, right, I'm going to cap my outgoings at whatever that is. But then you need to focus on growing, okay? So this is where I think that Martin Lewis, the money saving expert, is actually screwed over the country more than he thinks, or more than people think. Because what happens is he's got everyone into a scarcity mindset. He's all about saving, spending 10 hours going to this website to get some sort of discount, and it's complete bollocks in my opinion, because you're never going to you're never going to shrink out of a hole. That's all he's doing. He's helping people get comfy in their own hole and shrinking into it. You'll never get out of it. You have to work on growing. You have to work on growing your wealth. So yeah, put a cap on your existing expenses, but now dedicate all of your time not for looking for discounts, but for looking for growing cash flow. That is all what wealth generation is. And then as you grow your cash flow, or if you get a pay rise at work, that's probably the easiest thing you can do. If you have a job, getting a pay rise is the easiest thing you can do. But you have to go way over the top and really bust a gut in order to get noticed, blah, blah, blah. And if you're in a job where it's really impossible, like let's say the military, no matter how, brown-nosing and awesome you can be, you're not going to get that pay rise because it's time-based typically. Quit your job. Like, that's what I did. I left a really cushy job from flying planes and helicopters to pulling pints in a pub. And like, I was then very careful in what I then did as another job. So I landed in some shitty admin job, which I hated, which was very time consuming. So I was like, ugh. And then I thought, let's look for shift jobs. And so this was during when I was poor, like 10 odd years ago. I became not many people know this, I became a 999 ambulance call handler in Helsden in Norwich. And I did that for about 6 months, really long shifts, but it was like 4 shifts of 12 hours and then 3 days off. It was something like that, I can't remember. You had to work over like Christmas and New Year's, which is mental. But most of the time, what happened is that it was busy, during the daytime, it's all about old people falling over in their homes and then having to send a paramedic out to basically pick them up. That's pretty much. So I shit you not. Like, as a 999 ambulance call handler, 90% of our job was an old person's fallen down. We need to, and that is a death. That can be a death sentence for some old people, where they fall over and their bone, like every bone in their body just fractures. But yeah, and like me thinking this from like an NHS perspective, I'm like, Jesus, if I was I would somehow separate part of the ambulance service into old people picking up service to actual, I need an ambulance, because it was not a waste of time, but it did take up most of the ambulance resources, just picking old people up. What was I saying? Oh yeah, so yeah, it was busy at night with drunk people having fights and stuff like that, and but during the day it was really quiet. And so all I was doing is I was sat there, obviously with my headset, and I was reading about business and not trading, because I'd already done it for a while, but investing and business stuff. So I grew a huge amount of knowledge just whilst reading on the job. And then once I got my first business running properly, then I just quit my job. Simple. So yeah, sometimes you do need to do drastic things, just quitting the job if you can't get an instant pay rise. Like at my role, like all my staff, they can get, like, I have really high progression rates. So over the last 3 or 4 years, there's been 3 people that have started with me at 18 grand a year, which is my basic. I start everyone off at that. Because that's more of it's a test more than anything. But there's been, literally in the last 3 or 4 years, there's been 3 people that have started at 18 grand and ended up on 30 grand within their first year. Like, no, I'm not exaggerating this. to the point where like one guy who's not with us, who's my first videographer, Matty, still is a great bloke. He started on 18 grand a year. He ended up on 30 grand a year, and doing 4 days a week. And he did that probably within the first, I guess, within his first 15 months. So try and find a business where it's a meritocracy, not a nepotism or anything like that. So that's that. Different pots. So I'm going off on one. Gambling. Here's another one. So I guess it touches on having the different pots to scratch the itch, but there are some degenerate gamblers out there. I have to be careful how I say this. I have friends who have partners, and those partners are just flittering away all of their life savings. And so you've got to be very careful if your significant other has a gambling habit, because sometimes if they do, they are very good at hiding it, and it's disastrous. It really is. Like, there's this one couple I know where the bloke is gambling away their life savings and has borrowed money from their family, flitted it away, and it's put them in real shit situations. So yeah, I don't have a fix for that, but I'll just be aware of it, really. Or if it's you need to be aware of it and try and have those gambling coping mechanisms where you are sensible in one pot and not sensible in another pot. So yeah, so that's that. Let's have a look at the chat. Okay. Raymond, we do the same with TP and found Groupon is cheaper than the bulk buy places. Yeah, actually, good point with Groupon, because a lot of these companies that go on Groupon, they're using them as loss leaders. So they are massively discounting because they know they're hoping they get a conversion rate in the back end. So yeah, spot on. Good tip. Carmel, bulk buy equals bulk use. People are more wasteful if there is excess. Might be false economy. Not if you have a little bit of discipline. Like we bulk buy toilet paper. We don't we're not like doing this with toilet paper. So yeah, Alexander, you're correct. Bulk buying sometimes equals freezing money. Correct. Obviously, everyone will have different circumstances. For us, we've one of the things that I have is a rainy day fund. So we have at least, and this hurts me with the opportunity cost part, but in our personal joint bank account, we have 6 months worth of OPEX. So what this means is, let's say we're spending, $1,000 a month in stuff, food. We're not, but let's say it's $1,000 a month in food and groceries and whatever. We've then got $6,000 in capital, capital just sat in a bank, a rainy day fund. So yeah, we have 6 months worth of that, and that's one of my rules, because there've been times where I've been too obsessed with cash opportunity cost, where every single penny I had, I'd put it in the markets, and they'd be locked up because some would be in liquid investments, some in illiquid investments, and then we have car breaks down, or I need to fix something or whatever, and then I don't have the money. So this is one of my coping mechanisms, so we don't get in a bit of a bother. We literally just have 6 months worth of shit hits the fan money. So that capital, which it's actually quite a lot there because we have relatively high outgoings. We just use that pot for the bulk buying. So yeah. Aaron, have the times changed from 4 to... Yeah, sorry, I mentioned this on Friday. 4 p.m. is just really hazardous to me because I have to look after the kids from 5 o'clock, and then... Yeah, so from now on, all the wealth chats are done at 12 o'clock. Also, how do I find it on Clubhouse? I can't see it. Yeah, and also, Aaron, today, one of my internet routers is bust, so I couldn't hold it on Clubhouse. Normal service resumes tomorrow, hopefully. But yeah, if you follow me on Clubhouse, you'll find it. Also, if you look at the recordings, go to my YouTube channel, and there's a whole Wealth Gen chat playlist, and every one of these is recorded and put up on there. Raymond, if Martin helps people grow, then he can become accountable for what he says, which at present he isn't under FCA. Yeah, I see where you're coming from. He can't give financial advice because he's not regulated, etc. But you can do things about, he can teach people about growing capital instead of trying to cut corners and save capital. There's ways he can encourage people to set up their own business and all that sort of stuff. But yeah, I see where you come from a regulatory standpoint. Christopher, hi Simon, what was that first business? Like when, oh yeah, it was a bullion dealer. So that my bullion business was the first one that actually took off, where I had to literally stop getting jobs, had to stop pulling pints at the pub and all that sort of stuff. So yeah, that was a bit of a random one. Janie, I need to chat with my partner. Well, if you already bought the house, it's too late. Get him to do the WAP. So yeah, I think that's it. Does anyone have any questions? I've sort of gone off on one for 39 minutes. Man, this list, I could talk about way more, but we're going to be here for all day. I mean, this is what the WAP is. Literally, this is a non-shameful plug because people need the WAP. Go check out thewap.org. And there's a 30-day free trial. Just do it. Honestly, if I have any weight with any of you here today, just go to thewap.org. Literally, I'm just going to type it in here. This is everything you need, which your parents, schools, teachers, peers didn't teach you. I've literally put my life and soul into that. For those who don't know, in 2018 I sat down and wrote 450,000 words of everything I could think of wealth generation wise, business, marketing, everything. And then I chopped it all up into 10-minute animated videos and stuff like, and other type of videos. So that is literally everything. Cheers, Ed. Alexander, what coins would you personally invest in right now? Alexander, on my YouTube channel, one of the recent videos is the Kryptonian portfolio. You have access to my whole portfolio there. That's basically what I've put in. The Kryptonian portfolio on my YouTube channel. Cool. Timothy Barton, I'm not yet into biz, but the WAP has taught me so much. Thank you, Tim. Much appreciated. So, yeah, there's an endless, and have a look at it because I've changed things around. So if you did it like years ago, it's changed a lot since, because I've made it a bit like a Netflix, because there's loads of like mini chapters here. So just have a look. There's loads there, and there's more to be added. Aaron, I may be wrong, but I think I heard you say that crypto is much more safer place to store wealth. Is that right? So again, going back to the whole FCA sort of stuff, in my opinion, I do not see crypto as a risky asset anymore. Blue chip cryptos. So things, established cryptos, not shitcoins, they're very risky, but ones which have, billions of market cap that have been around for a while, they are, the risk is gone. You now have like top cover. And when I say top cover is like a military term. So, so basically, if you're contemplating on doing something naughty, you always want top cover because if your commanding officer is doing it as well, then the shit's going to land on his shoulders. Okay, so that's what is. Yeah, it's a military thing. Do we have top cover on this? Who's going to take the shit if this goes to fall? So when I say do we have top cover in terms of investing, we have that now with crypto. We now have one of the biggest companies in the world, Tesla, buying up $1.5 billion worth. You have MicroStrategies, which have God knows how much. Grayscale, they have tens of billions of dollars. And now even Morgan Stanley, or was it JP Morgan, who's been the biggest hater of cryptos, is now advising people to put 1% of their capital allocation into crypto. We have top cover now, so all sorts of CEOs, CFOs can now feasibly buy Bitcoin or Ether and not be in trouble. So it's really not risky. And when you look at Bitcoin, it's been the most hated asset on the planet. It's been attacked, God knows, endlessly. Yet it's never been hacked. It's the best performing asset in human history. Go figure. Anyway, it's a great session. Thank you, Carmel. Much appreciated. Janie, I'm looking to expand my book as you're wrapping up. I'll catch you on another one. Okay, cool. And Zed, why are you considering swapping gas into Neo at some point? Surely if gas is required to run Neo, gas will pop up at the same time as Neo, and returns seem to be higher in gas. What you'll find in Neo is that it hovers around 50%. You'll never see the gas being more expensive than the actual project itself, but a good level is 50% of the price of Neo. So that's where I'm selling my gas. Mark, my crypto investing has done very well. Started in 2018 and watched it plummet to 20%. It's now 10x. Yeah, word. I'm after some proper advice where to go next. I can't give advice. I cannot give advice, unfortunately. But yeah. Join the Realist Trader. You'll see every move I do. Like, I've got a Telegram, and everything I do, I text out real time. Cool. Right, let's call it a day. It's been, 40 odd minutes. Hopefully it's helped. Tomorrow is an interesting one. So tomorrow at 12 o'clock, so whether on Clubhouse or here on Facebook Live, I'm going to be interviewing and pulling out little learning nuggets from a guy that has a business that's doing £50 million revenue. So he's been doing it for God knows how long. We'll find out tomorrow. And he's the leader in his field. Okay, so be here for tomorrow, and I'll be interviewing this lovely chap. He is one of the nicest chaps you'll meet. Rightio. See ya. Bye.